Good afternoon, friends. Welcome to Konexio Technical Insights. I'm Rahul Randeria, and I would be hosting today's show. We would be discussing the trends, the setups, the patterns in Nifty, Bank Nifty, and other asset class. Last week, we have discussed that Nifty, though it has entered into overbought territory, the prices and the momentum is positive, and Nifty might test the levels of 14,634 mark. So exactly on Monday, last Monday, Nifty initially saw some profit booking or some slight cool off, and then started rallying towards the level of our target of 14,632, and it tested the highs of 14,650, 50 or 53 odd mark, and then some sort of correction was seen in the later part of the week. Now, again, last week we have discussed a new another asset class, which was Bitcoin, and it was important to highlight that it was rallied uh, almost doubled from the levels of 20,000 to 40,000, and it has entered into the over territory. At those levels near 40,410, we have discussed in our show that Bitcoin might see a significant correction from those levels and might test the level of 30,000 in 4 to 6 weeks. But in that particular week, Bitcoin almost corrected more than 26 to 27%. It tested the level of 30,200 and again bounced back from those levels. Currently, it is just quoting around 36,000. So again, we have the same view that in the short to medium term or in next 4 to 6 weeks, Bitcoin might correct towards the level of 30,000 to 28,000 mark. This was the different asset class, and it was just an observation. So we have highlighted as a trend following which was seen on the charts. Now, for the current week, I would like to discuss uh, first of all start from India VIX. India VIX has been in a tight range between 21 to 17 mark. You will see on the charts. It has been consolidating for a very long period of time. Yes, you can see on the charts, and it is on the verge of a breakout. So currently, it is just quoting around 24 mark. Slowly and gradually, the VIX is getting stronger and stronger, which is creating pressure on the Nifty and Bank Nifty at the higher levels. Now, from the current levels, I expect that India VIX could test the level of 31 to 35 in next 4 to 6 weeks. So this might have an impact on the Nifty and Bank Nifty. So we might see some sort of further selling pressure or profit booking in Nifty and Bank Nifty in the coming weeks. So definitely the India VIX is poised for a rally towards the level of 31 to 35 in short to medium term, maybe 4 to 6 weeks. So one need to be cautious at these levels. Strategy would be to take your positions light, book profit at the higher levels wherever you don't get the opportunity. So this is the observation in India VIX. Now I would like to discuss in Nifty. In Nifty, Nifty has been moving in the upward rising channel, making higher tops, higher bottoms from its March lows. From 7,500, Nifty has been moving in a rising channel, making higher top, higher bottom till the recent highs. You will see on the charts. After testing the levels of 14,653 odd mark, you can clearly see on the charts that after testing the resistance line, Nifty has faced some sort of selling pressure or profit booking at the higher levels in the last 3 days and ended on a weak note. These are daily charts, but I would just like to highlight that on the weekly charts, it has formed a shooting star pattern, which is a bearish pattern at the higher levels. So one needs to be cautious. But again, on the contrary, in the last 2 months, the same pattern has happened. The Nifty has formed a bearish pattern, an engulfing bearish pattern. But again, from the next day, it has started rallying on the upside. So one needs to be cautious in Nifty from Monday. Yes, though the indicators are also showing some sort of weakness. Uh, uh, in the lower bottom, you can see RSI indicating sell signal or weakness at the higher levels. Multiple times, RSI has tested the levels of 80, 81, 82. You can clearly see on the that on the RSI mark, and it has tilted southward. So definitely, again, from these levels, some sort of cool off could be seen, but at these levels one need to see how the Nifty is panning out at particular levels. So maybe on the downside, 14,300 or 14,200 could act as a strong support, and from there we have to take a fresh view whether that Nifty is rallying towards the upside or not. But clearly looking at the pattern, we might see Nifty and showing some sort of selling pressure at the higher levels, because India VIX is also indicating that the VIX might test the levels of 31 to 35 in next 4 to 6 weeks. Now, the crucial support in the Nifty for the next week are placed at 14,221. And if it breaks those levels, then the next is the psychological mark, which is 14,000. So the crucial support is coming at 14,039. So the two important support levels in the Nifty are 14,221, and then if it breaks, then 14,000, which is the psychological mark. On the upside, the major resistance are placed at 14,545. If it breaks, then it might again retest the all-time high, which is 14,653. And if it breaks those levels, then it can test the levels of 14,799 marks in the Nifty. So one needs to closely monitor these support levels and then take position in Nifty accordingly. So as of now, looking at the VIX, the daily pattern on the Nifty, it would be a profit booking seen at the higher levels. Now, I would like to discuss the Bank Nifty. Bank Nifty has discussed last week that it might test the major resistance of its previous highs. Maybe 1 year prior, the high was around 32,620 odd marks. From there, it tested the level of almost 17,000 and 16,000. And from there, again, it is retesting those levels. So now you will see on the charts that Bank Nifty also facing the major resistance at those level. Yes, you can clearly see a horizontal blue line where previously in the March 2020, it has tested the level of 32,600. From there, it went down to the levels of almost 16,000, 17,000 mark. And then from March 2020's lows, it has started rallying, making higher tops, higher bottoms. And again, it has tested those levels of 2,718, which was maybe Wednesday or Thursday's high. And again, on the daily charts, we can see a Bank Nifty has formed a bearish pattern. That was a Friday candle. You can clearly see on the screen. But most important part of this pattern, what I have identified is that the rising channel pattern. You can see a two upward rising triangle formation, blue line, which is clearly indicating an upward rising wedge. And it is the crucial support for the wedge is coming around almost 31,000 mark. So until and unless Bank Nifty is sustaining about 31,000 mark, the trend is still intact. So the strategy again would be uh, some sort of profit booking could be seen at the higher levels. On the contrary, again, after profit booking or some sort of weakness, the buying is also seen. So one needs to be very cautious on Bank Nifty also. It would be highly bumpy ride because on the month end and again on the 1st February, the union budget. So definitely from here onwards till budget, the ride in the Nifty and Bank Nifty would be highly bumpy, highly volatile. So one needs to trade with strict stop losses and one should stay uh, light-footed. Now, the crucial support in the Nifty are placed at 31,725. First support. If it breaks those support, then next support is coming at 31,368. If it breaks those levels, then the final support for the week is coming around 30,893. Whereas on the upside, the major resistance are placed at 32,544. If it sustains above those levels, then 32,718. If it breaks those levels, then it would go into unchargeable territory, and next resistance would be around 33,333 mark. So these are the supports and important supports and resistance for the next week. And as I have discussed that now we are heading towards the union budget. So from Monday onwards till the budget, the ride in the Nifty and Bank Nifty would be highly bumpy, highly volatile. We might see wild swings coming in the on the both the indices. So one needs to be cautious and trade with strict stop losses. Now, I would like to discuss the derivative segment. First of all, I would like to discuss the Nifty. In Nifty, the strong open interest in the strike price, what we have seen that the strong open interest built up are seen in the strike price of 14,600. You can see on the clearly see on the screen. Then 14,700 and 14,800. Now, in the percentage change, you can clearly see that there has been a strong writing of the calls at the higher levels. That means 14,600, 14,700, and 14,800, which clearly indicates that we might see selling pressure at the higher levels because strong writing has been seen on the Nifty calls at the higher levels. Now, in Nifty puts, the strong position where we have seen that in the Nifty puts are at 14,300 call, then 14,200 call, and 14,000 calls. You can clearly see on the screen. In the percentage change, all the data is in green, which indicates that uh, there has been buying seen in these particular uh, Nifty calls, which is 14,200, 14,300 calls, and 14,000 calls. So this indicates that writing in the calls at the higher levels, which indicates that selling pressure could be seen and building up of the strong position in Nifty puts, 14,300 puts, 14,200 puts, and 14,000 puts, which indicates that we might see Nifty uh, uh, might see some sort of selling pressure or profit booking from the current levels. So for the time being, or for the first week, first 2 3 days, we might see selling pressure at the higher levels, and Nifty might drift towards the level of 14,200 or 14,000 mark. So one need to be cautious. Now in Bank Nifty, the major position which in the calls are built at 32,500. You can clearly see at 33,000. And again, in the percentage change, you can clearly see that there has been a strong writing of out of the money calls at 32,500. The major portion, the strong portion has been built in the Bank Nifty puts are 30,000. You will see on the screen where you might see selling pressure at the higher levels in Bank Nifty, and the a strong position where the position has been built in the Bank Nifty puts are placed at 32,000, 31,500, and 31,000. You can clearly see that these are the strike price of out of the money puts where the strong open interest had been built. Again, in the percentage change, you can clearly see it is in a green. It is highlighted in green, so which indicates that there has been buying in this particular puts of the Bank Nifty, which is around 32,000, 31,500, and 31,000. So this has clearly indicated that again we might see some sort of pressure in Nifty and Bank Nifty at the higher levels, at least for the first 2 days on Monday or Tuesday next week. So one needs to be cautious. Now the final segment of the day is the investment call, which is from the mid cap. I have identified one stock which is looking good for long term investment, which is Godrej Consumers product. On the daily chart, the stock has formed an inverse head and shoulder pattern, and the neckline is just near 780 odd mark. The stock has given a breakout, and on Friday we have seen some sort of pullback. So long-term investors can accumulate this stock from 780 to 760. On the upside, I have a target of 850 to 870 in next 12 into next 10 to 12 months. So definitely for long-term investors, Godrej Consumer Products is looking good from the current levels. One can accumulate from 780 to 760 for a target of 850 to 870 mark. So I have completed all the observation and I have discussed all the data for the week. I would like to conclude the call. Thank you very much for watching the show. Any suggestion you can give in the comment box. And for live update of calls, you can connect me to my Twitter handle, which is @Rahul Randeria. Thank you very much and have a nice trading week.